Welcome to the Opening Bell Report.
Okay, so imagine this. You wake up, you grab your phone, maybe you're still half asleep. You open your brokerage app, which, let's be honest, is usually a mistake before coffee.
Oh, always a mistake.
And you just see a crater. I mean, a massive smoking crater where one of your big tech positions used to be.
Ouch.
I'm talking about a 24% drop in a day.
That's not just a bad day. That's the kind of morning that makes you want to close the laptop and just go back to bed.
Exactly. It's full-on panic mode. It's blood in the streets, as they say.
Right.
And that is precisely what happened to Unity Software, ticker symbol U.
Right.
If you were watching the charts, it didn't look like trading. It looked like, I don't know, a fire drill where everyone was sprinting for the exits at once.
It was a brutal sell-off. And usually when you see a drop that violent, that fast, your reptile brain just takes over.
Yeah, the instinct is to run.
The instinct is to run. You assume something is fundamentally broken, the house is burning down.
Right. You don't stick around to roast marshmallows. But, and this is why we're here, we have this fascinating analysis report in front of us that looks at that exact same burning building and says, wait a minute.
It says, this isn't a disaster. This is a gift.
Which is such a bold claim.
It's a classic contrarian setup. The analysis we're diving into today argues that this massive drop, this moment of, peak fear,
Yeah.
it might actually be the biggest gift the market has offered in 2026.
A gift. Down 24%. That feels like trying to catch a falling knife with your bare hands.
It does.
But that's our mission for this deep dive. We're going to unpack this report and figure out why, amidst all this doom, the data suggests buying Unity at what, around $29 a share could be the move.
It's a big claim. So let's start with the panic.
Okay, so before the silver lining, we have to respect the storm cloud. What on earth caused a crash this big?
It really boils down to two words.
Okay.
Project Genie.
Project Genie. It sounds almost magical, like a Disney movie or something.
It does, but the market treated it like a horror movie monster. This is the big Google announcement.
Right.
Google unveils Project Genie. They call it a foundation world model, and the narrative that instantly took hold, the story that just spread like wildfire.
What was it?
It was simple and terrifying. Game engines are dead.
Dead. That seems a little extreme. I mean, Unity is the engine under the hood of what, like half the world's games?
It's the fear.
And it's just obsolete overnight.
The narrative suggests that in the very near future, the traditional way of making games, the coding, the 3D models, the physics, all of it is going away.
So the idea is you won't need Unity's tools.
You won't. You'll just type a prompt into an AI like Genie. You'll say, make me a cyberpunk RPG with dragons, and poof, the game just exists.
Okay, now I get the panic. I really do. If I can just Genie a game into existence, why am I paying Unity for a license? It sounds.
Existential.
Yeah, an existential threat. It's like when digital cameras showed up and Kodak was still talking about film.
That's the perfect analogy. And you have to remember, the market hates uncertainty, but it loathes existential threats.
So how's it pricing Unity right now?
The report says the market is pricing Unity as if it's going to zero. Not a bad quarter, but like a buggy whip manufacturer the day after the Model T rolled out.
It just feels terrified. Like everyone saw this Google demo and said, game over.
But this is where the analysis says, stop, breathe, look at the data, because while the narrative is screaming obsolescence, the actual numbers coming out of Unity tell a completely different story, a confusingly positive story.
Okay, so let's pivot to that, the reality check. Because if the market is screaming bankruptcy, surely the company is just bleeding cash, right?
You would think so. But the report, it calls Unity a hidden financial fortress.
The hidden fortress.
And hidden is the key word. Everyone was so focused on this AI ghost story that they completely ignored the earnings report.
So what's a real number? What do they ignore?
$151 million.
Okay, big number. But context is everything. Is that revenue? Is that just sales? Because you can sell $1 billion worth of stuff and still lose money.
No, and this is the crucial part. That is free cash flow. FCF.
In one quarter.
Generated in Q3 alone.
Okay, so let's break that down for anyone listening who isn't staring at balance sheets all day. Why is free cash flow the metric that matters here? More than just revenue.
So think of it this way. Revenue is vanity, cash is sanity.
I like that.
Revenue is just the money walking in the front door. It doesn't tell you what you spent on servers or R&D or rent. Free cash flow is what's left over after you've paid all the bills.
Right.
It's the money that actually lands in the bank.
So it's the keepable profit. It's the money they can use to buy back stock or acquire another company or just survive a downturn.
Exactly. It is their oxygen. And generating $151 million of it in one quarter is massive. That's a 32% margin.
32%. For a software company, that's elite.
It is. And it's a huge turnaround. I mean, remember, just a couple of years ago, the whole knock on Unity was that they were unprofitable. They were just burning cash to grow.
Right.
That era, the report argues, is over. They aren't burning money anymore. They're printing it. They've built a war chest.
I like that image, war chest. So you have the market screaming, Unity is broke. And meanwhile, Unity is quietly stuffing $150 million into its mattress every 3 months.
That's it. And that cash gives them options. It lets them fight back, invest in their own AI. It lets them outlast the panic. The report really emphasizes this. When a company is this profitable on a cash basis, the risk of it actually going bankrupt is way, way lower than the market thinks.
So we've got this huge disconnect, narrative of doom, reality of cash. And in investing, that disconnect usually leads to a price discrepancy.
Exactly.
And the report talks about unwrapping the gift. So let's talk valuation. How cheap is this stock right now?
This is where the numbers get really, really stark. To see how cheap Unity is, you look at the price to sales ratio, PS.
Right. Basically, how much are you paying for every dollar of revenue the company brings in?
And in the tech world, during the boom times, these numbers can get, well, insane.
Oh, I remember. 100 times sales sometimes.
Absolutely. So historically, back in 2020, 2021, Unity was trading at a PS of anywhere between 30 and 40.
30 to 40 times sales.
Right.
That is rich. That's priced for absolute perfection.
It was incredibly expensive. But today, after this crash,
What is it now?
it's trading at approximately 7 times sales.
Wow. From 40 down to 7. That's a collapse. That's a fire sale.
It is. And to give you some context, look at a competitor like Roblox. Great company. They're trading at about 9 times sales.
So Unity is now trading at a discount to its peers and a massive discount to its own history.
And the report brings up this idea of time travel.
Time travel, what do they mean by that?
It's the idea that you're getting a second chance. Remember the 2022 bear market? How crushed tech stocks were.
Of course.
Unity is back at those price levels. But, and this is the whole insight, the company is fundamentally stronger today than it was in 2022.
Right. Back in 2022, they weren't printing $150 million in cash. They were a much messier business.
Exactly. They were losing money. They were doing that confusing merger with ironSource. Now, they're a lean cash-generating machine. So you're getting a better, stronger company.
But you're paying the crisis-level price for it.
That is the definition of a value discrepancy. It's like finding a brand new designer suit at a thrift store price.
The report calls it buying a profitable tech monopoly at a discount.
Because they still are, in mobile gaming, basically a monopoly.
Okay, but I have to play devil's advocate. We can talk cash flow and PS ratios all day, but let's go back to the elephant in the room. Google. Project Genie.
The existential threat.
Yeah. Because even if it's cheap, and even if they have cash, if the business model is dead, none of that matters. Blockbuster was cheap right before Netflix ate their lunch.
That is the crucial question. Is the moat real? Or is it a mirage? And the report argues very, very strongly the moat is real. And it comes down to understanding what a game engine actually does.
Okay, so break this down. Why won't Project Genie just replace Unity? I mean, AI is getting terrifyingly good at making images, making videos.
They do look incredible, but game development isn't just about making pretty pictures.
Right.
The fear is that AI can make visuals, and it can, but a video game isn't a video. A video is passive, you watch it. A game is an interactive simulation of physics and logic.
Sure. If I jump in a game, gravity has to pull me down. If I walk into a door, I shouldn't phase through it like a ghost.
Exactly. It needs collision detection, state management, monetization loops. It needs to run on an iPhone 12 and a high-end PC at 60 frames per second. The report argues that an AI prompt can generate a scene. It can hallucinate a beautiful image.
But it can't build the engine.
It cannot, not yet, generate the complex, interconnected systems of logic that make a game playable.
So it's the difference between asking an AI to draw a picture of a Ferrari and asking it to build me a working engine that I can actually drive.
That is a perfect analogy. The Google model is essentially predicting the next pixel in a video. It's dreaming. A game engine isn't dreaming, it's calculating, it's rigid logic.
And developers need that control.
They have to have it. If you're building a competitive shooter, you can't have the AI deciding that, sometimes bullets bounce off people because it looked cool in the training data.
That makes total sense. But what about the developers? Couldn't they just switch if Google figures out the logic part?
That brings us to the stickiness factor. Do you know what percentage of mobile games run on Unity right now?
I know it's the standard, but what's the number?
70%. 70.
Wow. So almost every game on my phone is Unity.
Yes. And think about the human side of this. You have millions of developers who've spent years learning C#, mastering the Unity interface. They have libraries of assets they've built or bought.
Right.
The report asks, do you really think they're going to trash years of work tomorrow to switch to a Google prompt that might just make a glitchy mess?
No way. It's sunk cost.
Yeah.
If my whole studio is built around Unity, I'm not changing it on a whim. It's like trying to get an Excel user to switch to anything else. You just don't.
That's the moat. The ecosystem is incredibly sticky. And there's one more piece. Unity isn't a sitting duck here.
Right. They have their own AI tools. Muse, I think.
They do. Tools like Muse and Centis. The report points out that Unity is integrating AI into the engine. So instead of AI replacing the engine
becomes the place where you use the AI.
Exactly. It enhances the workflow. It doesn't replace it. So when you put it all together, the complexity, the stickiness, Unity's own AI, the Google threat starts to look much less like a death sentence.
And much more like a narrative overreaction.
Yes. The market saw the headline Google AI and panicked without understanding the actual mechanics of how games get made.
So let's bring it all home. We've dissected the panic, found the cash, analyzed the valuation, and stress-tested the moat. What's the final verdict from the report?
The verdict is clear. This is an asymmetric bet.
Asymmetric, meaning the odds are tilted in your favor.
It means the potential upside is just significantly larger than the potential downside.
Okay.
The downside is protected by that $151 million in cash flow. The company isn't going broke. There's a floor. But the upside, if the market just realizes it overreacted.
And it goes back to a normal valuation.
Not even a hype valuation, just a sane one. The gains could be massive.
So what's the strategy? The report was pretty specific about the game plan.
The plan is simple, but it's psychologically very difficult.
Okay.
You start a position right here at roughly $29. You ignore the noise.
You buy when others are fearful.
Yes, and then it adds a second layer. If the stock drops to $25, you don't panic sell.
You buy more.
You buy more, you lower your cost basis, you treat the drop not as a loss, but as a sale on a luxury item you wanted anyway.
It takes guts, though. It's easy for us to sit here and say, buy the dip. It's very different to click the buy button when a stock is down 24% and everyone on social media is screaming it's going to zero.
And that's the difference between a tourist and a value investor. The report leaves us with a really powerful question to think about.
What's that?
In a market driven by headlines and panic, are you buying the fear or are you selling the news?
Buying the fear. That's the hard part.
It is, but the gift only exists because of the fear. If everyone thought Unity was safe, if everyone knew about the cash flow, it'd still be at $40 or $50. The discount is the fear.
That is a great point. You don't get the bargain without the baggage. You have to be willing to carry that baggage until the market realizes it's just a suitcase full of cash.
That's a great way to put it.
So just to recap the three pillars of this case one last time for everyone listening. So they have the key takeaways. Pillar 1.
The drop is emotional, not fundamental. The Google threat is technologically misunderstood.
Pillar 2.
The financial fortress, $151 million in free cash flow, that protects you from the bankruptcy scenario.
And pillar 3.
Valuation. 7 times sales for a profitable monopoly is just historically cheap.
It's a chance to buy a market leader at a distressed price. It's fascinating how one news cycle can just erase a quarter of a company's value. And yet the underlying machine, the cash, the developers, it hasn't changed at all.
That is the inefficiency of the market. And that is where the opportunity is.
It makes you wonder, doesn't it?
Yeah.
If Unity is the gift of 2026, what else is out there that people are terrified of right now? It forces you to check your own gut reaction. When you see a scary headline, is your first instinct to run or to dig?
Most run. The profitable ones dig.
I love that. Most run, the profitable ones dig. Well, that's a wrap on our deep dive into Unity. It has definitely given me something to think about next time I see a stock crash.
Absolutely. Always look for the cash flow behind the panic.
Thanks for listening, everyone. We'll catch you on the next deep dive.
Don't forget to like, share, and subscribe for more.